Hey everyone, welcome back. We like to go deep here, and today it's all about Bitcoin. We're diving headfirst into this dense report that landed on our virtual desks.
And it's a fascinating one. See, most people, they hear Bitcoin and they think, oh, another tech thing.
Right, like some new app or something.
But it's so much bigger than that, you see. This goes way deeper. It's about the nature of money itself.
The whole system, right. And it's interesting, this report, it starts back in 2008 with the financial crisis, almost like that was the birth of Bitcoin out of necessity. Like, we got to find a better way.
Exactly. That's the whole idea of decentralization. No single point of failure, no government or bank calling the shots.
So instead of relying on, like, one central authority.
You've got a network of computers all over the world, all working together.
Okay, so how does that actually work? I'm picturing like, I don't know, a giant computer network or something.
Think of it as a digital ledger. This ledger is called a blockchain, and it keeps track of every single Bitcoin transaction ever made.
Every single one. That's got to be, like, massive.
It is. But here's the key. Everyone on the network has a copy of this ledger, so it's completely transparent.
Oh, okay.
And that's what makes it so secure. To tamper with it, you'd need to hack into every computer on the network simultaneously. Good luck with that.
Yeah, good luck with that is right. That's amazing.
It is elegant, really. This system, it ensures that Bitcoin is incredibly difficult to counterfeit or manipulate.
Okay, so new Bitcoins, they're not just, like, printed by a government or something.
Right. New Bitcoins are created through a process called mining. Basically, people use powerful computers to solve complex math problems.
Mining, that sounds intense.
It can be. The first one to solve the problem gets to add the next block of transactions to the blockchain. And for their efforts, they're rewarded with Bitcoin.
So they're like digital gold diggers, in a way.
In a way, yes. And this whole mining process, it's not just about getting new Bitcoin out there. It also helps to secure the network. The more computing power is dedicated to mining, the more secure the network becomes.
Right, because you need more and more power to potentially control it. Fascinating. Okay, so this report talks about some big players starting to get involved in Bitcoin, like really big.
Absolutely. You've got companies like MicroStrategy. They went all in, putting a significant chunk of their corporate treasury into Bitcoin.
I remember when they did that. It made headlines everywhere.
It did. They basically said, we believe in Bitcoin as a long-term store of value, like a digital version of gold. And that move, it really legitimized Bitcoin in a lot of people's eyes.
It was a huge deal. And then, of course, there's Elon Musk, Tesla.
Right. When Tesla bought Bitcoin, that sent shockwaves through the market. Suddenly, everyone was talking about it.
It went mainstream practically overnight.
Pretty much. And then you have El Salvador, a country that actually adopted Bitcoin as legal tender.
Yeah, El Salvador, that was huge. What a bold move to make that your national currency.
Very bold. But it hasn't been without its critics. The International Monetary Fund, they've raised concerns about the risks it poses to El Salvador's financial stability.
It's a huge experiment, really, playing out on a global stage. Makes you wonder what other countries are thinking about this.
Absolutely. It challenges the very idea of what a national currency can be. But one thing's for sure, this Bitcoin story, it's just getting started.
It's moving fast. Speaking of moving fast, we have to talk about Bitcoin's limited supply. This report really dives into that, the fact that there will only ever be 21 million Bitcoins.
Yep.
Ever. And we're already a good chunk of the way there, right?
We are. Over 90% of all Bitcoin that will ever exist has already been mined.
Wow, so what happens when we hit that 21 million mark? That's it.
That's the big question, isn't it? It's projected to happen around the year 2140, so still a while off. This built-in scarcity is one of the key things that makes Bitcoin so intriguing to a lot of investors.
Like digital gold, right? Only so much to go around.
Exactly. And the scarcity, it's baked right into Bitcoin's code. Every 4 years, something called a halving event happens.
Okay, halving event, you're going to have to explain that one.
So every 4 years, the rate at which new Bitcoin is created gets cut in half. The reward that miners get for adding a block to the blockchain, it's halved. This means Bitcoin's supply grows slower and slower over time, further reinforcing its scarcity.
So it's like a built-in mechanism to potentially drive the value up over time.
Right. Think about it. As demand increases and the supply is restricted, basic economics tells us the price should go up. The most recent halving event was actually back in May of 2020.
Okay, I see. It's all very intentional, this whole system.
It is. And the scarcity aspect ties into another reason some investors are drawn to Bitcoin, its potential as a hedge against inflation. You see, with traditional currencies, central banks can print more money, potentially devaluing the currency over time.
Right.
But with Bitcoin, its fixed supply means it's not subject to the whims of central bankers or governments.
So some people see it as a safer bet, especially with all the talk about inflation and a potential recession.
Exactly. They view Bitcoin as a way to preserve their wealth, a sort of safe haven asset, much like gold. But of course, like any investment, Bitcoin comes with its own set of risks.
And it's known for its volatility. Those price swings can be pretty wild. This report actually gets into some of that, talking about technical analysis.
Yes, technical analysis, charts, patterns, trying to predict where the price might go next. It's a whole world unto itself.
It can be a little overwhelming.
It can. Even for people who have been in the markets for a while, there's a lot to unpack.
But I mean, even with the charts and everything, it's still kind of a guessing game, right? Like no one can predict the future.
Exactly. It's not an exact science. A lot of it is about understanding probabilities, managing risk, and there's another piece to this whole puzzle, this tech, it's constantly evolving.
Yeah, the report mentioned something called the Lightning Network, which sounds pretty interesting.
It is. The Lightning Network, think of it like a layer on top of the Bitcoin blockchain. What it does, it basically allows for much faster and cheaper transactions. So instead of waiting for transactions to be confirmed on the main blockchain, which can sometimes be slow.
Right, especially during busy times, I've heard.
Exactly. Well, the Lightning Network, it's like creating these payment channels off the main blockchain, so transactions can happen almost instantly.
So it's like adding more lanes to the highway to get all the traffic through faster.
Exactly. A perfect analogy. And this could be a game changer for using Bitcoin in everyday life, for things like, buying coffee or even micropayments online.
Yeah, that makes a lot of sense.
The technology, it's evolving to make Bitcoin more practical, more accessible for everyone.
So speaking of accessibility, what about the average person who maybe doesn't want to mine Bitcoin or deal with the technical stuff? What's the easiest way for them to get involved?
Well, one thing that's been gaining a lot of traction is the idea of Bitcoin ETFs.
ETFs, right? Yeah,
Yeah.
I've heard of those.
An ETF, or exchange traded fund, it's essentially like a basket of assets that you can buy and sell on a stock exchange, just like you would with a regular stock.
Okay.
A Bitcoin ETF, then, would hold Bitcoin as its underlying asset. So instead of having to buy and store Bitcoin yourself, which can be, let's be honest, a little intimidating for some people.
And complicated.
Exactly. An ETF simplifies things. You could buy shares of a Bitcoin ETF through your regular brokerage account, just like you would with any other stock or fund.
So it's kind of like dipping your toes into the Bitcoin waters without, diving in head first.
Exactly. And that's why a lot of people believe that ETFs could be a real catalyst for mainstream adoption of Bitcoin.
Yeah, I can see that. It brings up something else, though, that I've been thinking about. All this talk about central banks, inflation, the potential recession. How does Bitcoin play into that whole bigger picture?
That's the heart of it, isn't it? You see, Bitcoin, it was designed in a way as an alternative to the current financial system.
The system that, maybe some people are losing faith in right now.
Exactly. When you have central banks printing money, inflation rising, people start looking for alternatives, for ways to protect their wealth. And Bitcoin's decentralized nature, its fixed supply, it's appealing in that sense.
It's like a vote of no confidence in the traditional way of doing things, in a way.
You could say that. It all boils down to trust, really. Where do you place your trust? In governments, central banks, or in this new decentralized system?
Big questions, right. And speaking of big questions, this report also touches on regulation, which seems like, I don't know, kind of a Wild West out there right now.
It is. Governments around the world, they're trying to figure out how to handle this whole cryptocurrency thing.
The SEC, the CFTC here in the U.S., then you have the EU with MiCA. I mean, it seems like everyone's trying to grapple with this.
It's a moving target, that's the challenge. But the fact that governments are taking it seriously shows you that Bitcoin, it's not going away anytime soon.
It's here to stay. Speaking of here to stay, remember when El Salvador made Bitcoin legal tender?
How could we forget?
What's the latest on that? Has it been smooth sailing?
Well, it's been a bit of a mixed bag, to be honest.
How so?
On the one hand, El Salvador, they wanted to be pioneers, attract investment, position themselves as leaders in this new digital economy.
Right, make a statement.
Exactly. But they've also faced some hurdles. Technically, for one, implementing a system like this on a national scale, it's not easy.
I can imagine.
And then you have the International Monetary Fund. They've been pretty vocal in their criticism of El Salvador's move.
They weren't happy about it, were they?
Not really. Their concern is that it could destabilize El Salvador's economy, put their financial stability at risk. So it's kind of a wait and see situation right now.
It's a fascinating case study, though, no matter what happens. It shows you how quickly things are changing in the world of finance.
It really does. It underscores the importance of staying informed, being adaptable.
Definitely. So we've covered a lot of ground here. The tech, the investment side, the global implications. But this report, it wisely emphasizes the importance of risk management when it comes to Bitcoin. What are some of the things listeners should keep in mind there? It's a lot to wrap your head around, for sure. And speaking of managing risk, one of the things this report gets into is something called a stop-loss order. It sounds like, I don't know, like a safety net of sorts.
It is, in a way. A stop loss order, it's basically a preset trigger that you set with your exchange or broker. If
Right.
the price of Bitcoin drops to that level that you set, it automatically sells your holdings. So it's a way to limit your potential losses.
Okay, so like, let's say I buy Bitcoin at, I don't know, $30,000, just as an example.
Right.
And I'm thinking, okay, I'm comfortable with it maybe dropping 10%, but that's it. That's my limit.
Right, so you'd set your stop loss order at $27,000.
Exactly. So if it hits that $27,000 mark, boom, it automatically sells and I'm out.
Exactly. It takes some of the emotion out of it, which is important because we all know fear and greed, they can really cloud judgment when it comes to investing.
No kidding.
Yeah.
What about some other strategies? The report mentions hedging.
Hedging, yeah. That's a bit more, how should I say, involved. It's basically a way to offset potential losses in one investment by taking an opposite position in another. So, for example, you might use something called futures contracts or options.
Oh, yeah, I've heard of those, futures and options. Not sure I totally understand how they work.
They can get pretty complex, but basically they allow you to kind of bet on the future price of Bitcoin, whether it's going up or down. So if you're worried about the price of Bitcoin dropping, you could use hedging strategies to potentially profit from that drop, which would then offset some of your losses in your actual Bitcoin holdings.
Okay, so it's kind of like having a backup plan in case things go south.
In a way, yes, but hedging is definitely more for, I would say, experienced investors who really understand how these instruments work.
Got it. So not for beginners necessarily.
Probably not. The key takeaway here is that there are tools out there, strategies to manage your risk when it comes to Bitcoin. But it's important to do your research, figure out what you're comfortable with, and maybe even talk to a financial advisor before making any big moves.
Right. Always good advice. This all circles back to something else this report emphasizes: diversification.
Ah, diversification.
Hmm.
The golden rule of investing. Don't put all your eggs in one basket, as they say.
Exactly. So it's not just about Bitcoin, right? It's about spreading your risk, having a mix of different assets.
Exactly. Your portfolio might include some traditional investments like stocks, bonds, maybe some real estate, and then potentially a portion of your portfolio allocated to cryptocurrencies like Bitcoin.
Right. So it becomes just one piece of your overall financial picture.
Exactly. And how much you allocate to Bitcoin, or any other investment for that matter, really depends on your individual circumstances, your risk tolerance, your financial goals, all of that.
It's a personal thing. You got to figure out what works for you.
Absolutely. There's no one-size-fits-all approach here.
Well said. So as we wrap up our deep dive into the world of Bitcoin, any final thoughts for our listeners today? What are some key things to remember as they navigate this, I don't know, what feels like a constantly changing landscape?
I think the biggest takeaway, if you walk away remembering just one thing from our conversation, it's this. Approach Bitcoin with a healthy balance of curiosity and caution. It's a fascinating technology, don't get me wrong.
It really is. It's captured a lot of people's imaginations.
It has. And it has the potential to really change the world of finance as we know it, but it's not without its risks. So do your research, understand how it works, and consider carefully how it might fit into your overall financial strategy.
I like that. Curiosity and caution. Wise words.
It's about being informed, making smart decisions.
Absolutely. Well, it's been a fascinating deep dive with you today. Thanks for joining us and for sharing your expertise.
My pleasure. Anytime.
And to all of you listening, thanks for being here. Until next time, keep exploring, keep learning, and we'll catch you on the next deep dive.